Kia ora, Craig here from the Small Business and Entrepreneur Festival, delivered to you by DHL, connecting your business to the world. Today we're super happy to have Miriam Hewson on, and this is the first episode for our Monday episode of the podcast, which is episode number 2. And today we're going to focus really down into business structure and managing your cash during a crisis, which are two things that are super important for small businesses and entrepreneurs. So without further ado, I'm going to bring in Miriam to the podcast, and we're going to get chatting and talk about those two subjects. Kia ora.
Kia ora. Kia ora, Craig. How are you?
I'm very well. How are you? I'm
well, thank you.
Cool.
Great to be here.
Yeah, it's good. So we are both based in Rotorua, but we're not doing this side by side. Obviously, I'm in it looks like a dark room, but it's not actually that dark when I turn around. But anyway, so Miriam, similar to all of the podcasts that we're doing, I'd like to always start off with your origin story, how you ended up in New Zealand, where you're from, some of your professional history or linear history, and then we'll take it from there. I'll pass it over to you.
Ka pai, thanks, Craig. So, kia ora, everybody. My name is Miriam Hewson, originally from Berlin in Germany. My journey started in New Zealand in 2009. Prior to that, I was an accountant in Germany, worked there, studied there, lived there, did everything there, and decided that there's more in the big wide world out there for me. And like so many people, took a backpack and started traveling. However, before that, I had a short stint in London. I worked in finance. They ended up offering me a job, and I said no thanks. Got my ticket to Australia and went for it, and really had 2 years where I was able to just explore the country, explore different cultures, because on my way I also went to Asia. And on that, really, it started my interest in business and finance and everything like that. I was able to watch different cultures do business, and that was really interesting because we so often look at analytical stuff, but it really comes down to the people and the relationships you form, and I learned so much about that. So I guess that was an important, pivotal sort of time for me to further develop the skill set that I already had. So in 2009, I landed in New Zealand and only wanted to be here for 6 weeks, carrying on. 12 years later, I'm still here. Have a family, we have 2 children, married to Scotty. And so I basically had to retrain a little bit to make my qualification equivalent here, and worked in chartered accounting firms the whole way through until I started my own business, Futureproof Concepts, about 3.5 years ago. Yeah.
Cool. So tell us a little bit about Future Concepts. Is that business?
So, as I mentioned, I worked in chartered accounting firms, and quite traditionally, you prepare financial statements, tax returns. Here you go, sign on the dotted line. And what was missing for me is the connection with people and the real understanding, I guess, from a grassroots level. And that is always something that I inspired to do, simply because to me, I understood that business is all about people and you can't separate the two. And so what Futureproof Concepts is, it's a business that I created out of the need for small to medium-sized businesses to really be able to ask the questions they don't feel like or don't feel comfortable asking in, I guess, a more established corporate environment. They feel like, I should know all of that. But the truth is, only 30% of your skill set makes up running a business. So what we do is really wrap around business coaching, our accounting skills, our analytical skills, but also working with like-minded professionals that have other skill sets that we may not have, such as marketing, what's the best insurance, how to deal with ACC, how to put yourself out there and things like that. So we are a registered provider for the regional business partners, which means you can get funding working for us. And there's a whole bunch of businesses that we work alongside with that do the same. So it's really a wraparound service, accounting and business coaching I guess it's 50-50 divided in our business. Both of these activities have different target audiences. People come to an accountant because they need it, not necessarily because they want to. However, when they come to us for business coaching, that is when they realize, hey, I've been doing this for a year, I'm stuck, it's not as easy as I thought. And then we really go in and help them further and really build a solid foundation. And small to medium-sized businesses is our niche, and we look after hospitality, tourism, a lot of tradies, which is cool because we're actually situated in an industrial area, and they don't feel like they have to take their shoes off, which is awesome because we like to be approachable and easygoing. But we service businesses and clients all over the country.
Cool. Very, very good. So I asked a question to all of our guests, and that question is, what is your all-time favorite brand and why?
This is quite easy for me. Obviously, as an accountant, I'm using Xero. And as it happens,
we love Xero.
We
love Xero. It's a SME&E festival powered by Xero. So thank you very much. And
awesome.
This is not paid Xero promotion.
No, and I don't get a commission for this either. You did bribe me. No, but Xero is one of the companies that intrigues me. It inspires me, and not because they offer accounting services or a platform to make it a lot easier for us as accountants, but because of what they stand for. I happen to do a white paper on Xero, their strategy, what they do in terms of well-being. They're providing services to all Xero clients, their families and their clients, which is essentially nearly all of us in New Zealand and beyond, with counselling, with things that help them get through these difficult times. And what I like about Xero is their model, their focus on their people, the way they have scaled their business. So to me, Xero is one of those companies that I inspire, I guess, to model. I like how they are accessible, approachable. I will share something funny with you. The other day, they obviously have a forum for people to share some things that they may have trouble with or need help with. And I don't know, am I allowed to swear on here? I keep it really quiet, but they basically
swear away, go away.
Somebody said in there, Xero, sort your shit out. So something obviously wasn't going well. The response was just outstanding, and it basically said, our sorting your shit out team is aware of the situation. We thank you for your patience, and we will get back to you very soon. And I thought, kudos, that was cool. So it's all about being real and relatable.
Cool. I would have to 100% agree. Xero is awesome. And in the next couple of weeks, we're going to have Craig Hudson, who's the managing director for Xero Aotearoa and Pacific, on, and he's going to be talking about well-being in the workplace. Focus really on that, so keep in tune with that. So let's move into our topic for the podcast. So we really want to dive into business structure. So the first question next question I'd like to ask is, like, what is a business structure? How do you define a business structure?
Sure. So a lot of the businesses or people come to me that have either they're just starting their business, they have an idea, or they're already established. And so people go to me, so how do I register my business? So for instance, you have an idea, you want to start your business, you have it already. They come to me and go, how do I register my business? There's 3 questions or 3 areas I usually ask them about. One is, what sort of assets do you own in your personal name? And it comes down to risk, right? So what is it that you need to protect from anything that you do beyond your personal life? The next thing is, what do you need to protect in your business? So in terms of what's the risk of your business, right? Me sitting in an office, you may think the risk is fairly low. However, the sort of work I'm doing, if I give someone wrong advice, then the risk all of a sudden is quite high. So we talk about financial risk, we talk about risk for people that you employ. So all of these components. So it's the personal. What's the personal risk? What's your business risk? And the third question is, and that's really important. What people really underestimate is, what is the vision for your business? And it's important there, and that's a whole different topic. But it's important that you set your business up with the intention of creating a really valuable asset. And one of these assets could be your intellectual property. So if you set up your business around your personal brand, then that means if you step out of it, you won't be able to sell that name or that structure to someone else because it's around it's around you. So the easy answer to the question is, if you have low risk, you don't own any assets, then you don't have to essentially register the business with IRD at all. So what that means there, I'm just going to take you through the four main business structures that people set up. One is sole tradership, one is a partnership, another one is a limited liability company, and the fourth most common one is a trust. So with a sole trader, if you are a sole trader, what that means is you're trading under your personal ID number. It means you are 100% liable with anything you own in your personal name. So if you have a house, Craig, and you give someone wrong advice and they sue you for it, and you can't pay it with the funds that you have in your business bank account, then whoever comes after you can take your personal home. So that's what we mean in terms of 100% liable with everything that you own on your personal name. So that comes back to, what is it that you need to protect? The sole tradership is really easy to set up because you don't have to. All you have to do is file an individual income tax return after the financial year end, which is usually March. And that way IRD will know you're now earning self-employed income, not just wages. So 100% liable, easy to set up. So there's advantages and disadvantages. The next thing is a partnership. So if you say you and I go into business together and we say, hey, we both have really cool skill sets, let's bring them together, we're a partnership. Again, this needs to be registered with IRD because a partnership requires a separate IRD number.
Mm-hmm.
However, you are still 100% liable for anything that happens between the partners at their respective partnership shares, I suppose. So what that means is, if our profit is $100,000, we split this equally. Say we have 50-50 part in a partnership. But we have to then return this income in our individual returns. There is no separate entity, I suppose, or separate legality. In terms of liability, if you do something wrong and we get sued, then I'm still liable for that.
Sorry.
So here we go. So that's why, yeah. So that's why I'm saying, as a partnership, it's cool. It's really good for a side hustle. If we both still do our own thing, but we have, a few, I guess, common projects that we're working on, probably nothing wrong with setting up a partnership. However, if you really want to take on, or I guess if you want to set up a business that can outlast you, so in other words, I might retire one day, but my brand is that strong that it can just carry on, it will hold itself. So other people come in and carry on for me. A business structure like a limited liability company is a pretty good option. And what that means essentially is that it is a separate legal entity. If somebody sues the company for having done something wrong, then they can only come after the assets to the extent that the company has invested in. So in other words, if the company owns a few vehicles, a building, things like that, it keeps the directors and shareholders separate to what's actually been invested in the company. Does that make sense?
It does make sense.
Yeah.
Yes.
So and hence the name limited liability company. Then we come to trusts, and trust is an interesting vehicle, and traditionally it was a really good idea. Trusts were basically a really good vehicle to protect your personal assets. So I have clients that have trusts where they have buildings, for instance, or their own home in there, and it protects that, but they have a business and running it under a sole trader structure. So they're a sole trader, which means they're 100% liable if something happens. However, people can't come after their house because it's sitting in a trust structure. There are different tax advantages and disadvantages for each of these different ones. Don't want to get too technical now. However, I guess with trust,
we'll do that on another one.
Yes, yeah. I guess with trust, it's fair to note that they're quite expensive to set up. You need legal advice. They're fairly administrative heavy, so there's a lot of administration. You need trustees, you need minutes, there's a lot of structure that you need to build around it. And quite often for the SMEs we're talking about here, it's not really a very common structure anymore to get into. So the most people that I'm dealing with are sole traders or companies or partnerships. And yes, you can move from one to the other. So if you as sole trader and you think, hey, my little side hustle actually turns into a pretty cool thing, then yes, we can absolutely move that from that into a company structure, for instance, to just protect yourself and create a brand that you can pass on. Because a company name is something you register with a company's office. And if you sell that, it actually becomes part of your IP, your intellectual property, right? Gotcha. So thinking about all of that sort of stuff when you set up your company structure.
So in summary, 4 options. So yes, the first option is solo, limited liability, partnership, or a trust.
Correct. Yeah.
I think there's over 500,000 small businesses around New Zealand, which makes up 97% or a little bit over 97% of all enterprises. At a rough estimate, what percentage would they all sit in? Like, would solo be 10% or 50% or 90%, or what would you think?
It is an interesting time to say these stats because obviously there's a lot happening at the moment, but generally I would say it's about 30.
Oh, wow.
Yeah. A lot of people start out, and it's sort of moving. So limited liability company is probably the most common, and one that I would recommend personally a lot to my clients, simply because you have that extra layer of security. To your personal name, it's completely separate and protects your personal stuff. And it's also something that you can create in a way that you can on sale create intellectual property with the name alone. So it's all about adding value, right? When you start your business, you want to make sure everything you do adds value to it. So at the end of the day, when it's time to sell or retire, you have something that that gives you a return. Because otherwise, why would you start your own business, right? But it moves. So a lot of my sole traders, when they first started, after a little while, I moved them across because I'm like, right, you actually, have now purchased your own home. Let's keep these things a little bit more separate. Yeah.
I've got a question. So I see sometimes especially on Facebook Marketplace and different sorts of platforms like that, where individuals are selling things that they make at home, and I'm making an assumption that there's no structure at all. What are the risks for someone doing that?
So essentially, it may look like there's no structure, but they're probably in a sole trader structure. So there's a difference between selling something because you have, some clothes to sell, or, hey, I'm at home and I'm making, I don't know, benches for children to play with. These people are usually a sole trader. And what that means is they would return that income in their individual income tax return, which all of you have to file each year anyway. However, IRD recognizes that if you earn a salary, they automatically calculate that for you because you're paying your tax as you go, right? But if you earn anything over and above, then this should be returned in your individual tax return. If you're selling something one-off, not really an issue, right? It's like, I have an old bike that I need to get rid of, I'm selling it. But if it's something that you purchasing material for to create with intention to sell, that is 100% a taxable activity, and it is deemed a sole trader. You don't have to register it because it all goes under your own IID number, but you have to return that in your income tax return.
Yeah, gotcha.
Yeah.
So just in summary, so I'm going to start making, I'm looking around my room, pot plants,
Yep.
and sell them. I'm doing it for financial gain.
Mm-hmm.
I'm not going to do anything to do with tax. I'm not going to make anything over $60,000. I'm not planning on it. So I've got to make sure that in my personal tax return, that I have to include the amount of plants I sold, which is $8,550.
Yeah.
In there, and then that's going to, and then IRD will work it out for you. Correct?
Correct. But also remember that if you sell something, obviously you would have to buy something to make that, right? Like you would have to buy potting mix, and you may have to buy some fertilizer and all that sort of stuff, which you can offset against the income, against your $8,500, right? And that's where us accountants come in, because we can adjust your income based on the expenses that you had, and also based on other things. Like you may use your own home in order to plant those things and do everything. So we can claim some home office, and that's where people go, oh, so how do you do that? And that's why accountants go study all these times in order to tell you how to do it. But there's different things you can claim against that, which then at the end of the day, it's not $8,500 that you have to return. It's probably less, because you have other stuff that you can claim against that, and that's what we call claim or deduct against your income. Yeah, as a self-employed person.
So another question then for this particular business that I've just developed. I'm not making much money, and if I go to an accountant, my assumption, or there might be a general assumption, that the services for an accountant might be expensive.
Yeah.
They are,
what sort of? That is a perception, right? That's a perception, right? I mean, look, there's no doubt that, and I'm shooting myself in the foot here. I hope no accountant is watching. There's no doubt that if you have large overheads like any other business, and you're sitting in a nice building and you drive, you have to be able to generate that sort of income. My approach is, yes, profit is not a dirty word. We're all in business to generate a return. However, keep it real. So there are different options. Some accountants charge subscription, so you can call them all the time. Some charge you time for money. However, if you only have a small business and you have, 20 transactions a year or 50 transactions a year, and you're quite good with an Excel spreadsheet, there's usually enough information on IID's website and their call center to help you through calculating it. So there's absolutely no reason, if you have a little bit of a financial awareness, that you'll be able to plug in those numbers. The one risk that you probably go into is that there are other things you can claim that you may not be aware of. And these are things that you don't see on your bank account, but these are things that basically we know are available. And IID may not necessarily tell you about these. So, as an accountant, we work alongside IID, but not for IID. We make sure that we prepare your financial statements in a manner that we can claim as much as we can within the rules for you. And then we basically, as a tax agent, pass that on to IID. And if there's anything else, then, we basically sort it on your behalf with them. So it just really depends how confident you are. There's no harm in asking a financial advisor to say, or an accountant to say, hey, I've done this, can you just have a look? But they will probably have to ask all sorts of questions before they can actually act for you. So yeah, you can do it on your own. So if you sell 20 plants per year, there's no reason why you couldn't.
Okay.
Yeah.
Cool. Awesome. I think that's really good. I think we'll wrap up the business structure and tax for now, and we'll move into our managing your cash during a crisis, because this is very topical and it's a super important element to any business and any personal life as well, is managing cash. So I might pass it over to you again and just say, what does managing cash mean, and how can what are some steps that a small business or any sort of business can, or someone who's potentially starting a business, take to make sure that they're keeping an eye on their cash flow and that they're not going to be caught short with things like taxes and GST returns and other sorts of things like that?
100%. So managing cash in crisis is one of those headlines. People. One of the most common questions I get asked is, why do I have to pay tax if there's no money in the bank? And that's because profit and cash are different, right? You pay tax on your profits, but some transactions affect your profit, but not your cash, like depreciation. Some transactions only affect your bank account, but not your profit, like taking drawings out of your business, which is money that you basically use for personal things. Your tax payments do not come off your income. They affect your bank account though, because they're calculated based on your profit. But there are four main areas when it comes to managing cash in crisis. One thing I would say, don't get to that crisis. So one is obviously the cash flow planning, and cash is king. Without cash, your business can't survive. Without profit, your business can't survive. So they're intertwined, but they're different. So cash flow planning is it's just a fancy word of saying, hey, how much income do you have per month or per week? Like I remember when I first started, I'm a bit of a nerd, but I went like weekly, if not daily, because I wasn't sure how much money I've actually got. So make sure you sort of try and estimate how much income that could be based on historical data, but past past transactions don't really tell you much about your future if you're not planning ahead and say, actually, we are going to be closed for Christmas for 3 weeks. Likelihood is we're not getting a lot of money in. So how can I plan for that trough in my cash flow? Do I need to go to the bank and ask for temporary overdraft? Can I sell some assets that are sitting there that I'm not using anymore? So that could be, any type of equipment, or is there any stock that I just struggled moving on? Can I just put a discount on? So it's about knowing when your troughs are in your cash flow, that you say, okay, I can actually plan that we get for example, a new range of stock in. So I need to move my old stock. It's been sitting here for 90 days. So there's things that you need to consider across the whole board of your business. How long has my stock been sitting around for? What are my expectations? The other thing in trades businesses, especially if your business is very overhead heavy, so if you have a lot of staff, if you have a lot of material purchases or big outlays, you've got to be able that, for example, an engineer would buy a lot of steel, and then that engineer makes that steel into something that he can then sell. How long does it take for that engineer to turn that steel that he had to pay for already into something that's actually tangible and he can sell? So you want to try and reduce that time as much as you can. And there's different ways of doing that, by purchasing in bulk, by basically measuring how much money you spend with each of your suppliers, and can you use that figure to negotiate better deals, So there's four areas. One is cash flow planning, one is protecting your income, manage your costs and cash injections. So managing your income in terms of protecting it is look at your existing customers already and see if you can actually offer something that enables them to, do a better job at what they're doing. Can you upsell, in other words? And that's where you go, okay, is there something for your existing customers? And that was really, really topical in COVID and right now. I mean, we're dealing with tourism businesses that were a sit-down restaurant. They were selling alcohol in Auckland. They can't do that at the moment. So what we've done after the last lockdown is we actually completely remodeled that business into a takeaway only, click and collect. Mm-hmm. And we used the existing skill sets of that particular business owner, because he now has turned that sit-down area into a bakery, and now he's selling bread and milk, and so we're adding an essential service to it. So have a look what you've already got here and how you can remodel that in order to create an essential service. Or have you had a look at your market recently? Has your target audience changed? Are people that used to come in, are they still coming? And if the answer is no, then there may be time to introduce another product or service to your bow. I guess it's all about creating a steady flow of income, and that's where a lot of businesses that we work with, we have introduced the likes of subscription services. So can you offer something over and above that people can sign up to and pay a regular subscription? Because that, it might not be a huge amount, but it all helps you. But the main thing I would say is have a really good health check of, are my customers still the same? Do they buy the same stock that they used to buy? Are they now opting to more sustainable options? Just as an example, when are my cash flow troughs? So when do I need to plan to, apply? The thing is with banks, they give you money when you have it. They're really tough to deal with when you don't. So that's why it's so important that you sort of look ahead at least sort of 3 to 6 months. I guess the rule of thumb is short-term lending is usually more expensive for you than if you go for longer-term solution. So go for business loan over a certain time rather than a cash flow, rather than an overdraft facility, simply because it's more expensive. Just quickly, I'm aware of time, but there is the ID cash flow loan available at the moment. If you have paid this off, if you have already applied for it but already paid it off, you are eligible to apply for it again. Use the wage subsidies, use the resurgence support payment. See if you can sell anything that's sitting around your store that you no longer need. Just move it on, get some discount, some pricing strategy around it. Make sure you don't leave behind with online services, people selling online, and if you're not on that platform, especially if you can't operate face-to-face, you're missing out. Get that support. One last thing, the regional business partners is a really, really good option if you can't afford someone to walk you through these different things and help you set that up. They have all sorts of professionals on their books that can help, that you can work with and you get funded basically to do that. So it's a really, really good option. There's a lot.
Yeah, there's a lot of options, but we're talking about the cash flow forecasting. It sounded quite complicated. So it's good that you brought up the regional business network, because they do provide an avenue, but they have, like, I'm thinking about a small trader who is operating. They're operating their business. They need to spend the time in business and to do that. What would you say to someone? I need to keep operating. I can't spend 6 hours, 20 hours, or whatever, however long it is going to take to work out this cash flow, or I have no idea how to do it.
Yeah.
And what would be your one suggestion for that person?
100%. So if you go to any bank online, they have templates sitting there. Call your accountant and say, just utilize the people that you already pay and get your money's worth, and say, help me out with this. And I mean, a cash flow forecast, it sounds quite fancy, but all it is really is you going, okay, how much am I selling this stuff for at the moment? How, in the last few months, how much did I sell? Am I anticipating the same level? And then you go, what are my monthly expenses? So it's really just sitting there and going, take your bank account statement and just have a look what's going out. A lot of business owners that we helped, it was that simple. And it took us probably no more than 20 minutes. And we said, this is May, this is what we've earned, this is what has come out. And then all of a sudden you go, I didn't realize I'm still paying for that. So that's a really good idea to then go, hey, actually, guys, I've overpaid you. So there was quite a bit of that going on. Just look at your physical stuff that's going through your bank account at the moment. It's not like, it doesn't have to sound scary, we don't have to come up with all that jargon to intimidate people. A cash flow forecast is nothing else than saying, here's my income for today, these were my outgoings. How can I reduce that in terms of outgoings? How can I bring my income up in order to, if your bank account, like if you're noticing because we talk about break-even points and that sort of stuff. All it means is, do you make enough to cover all of your expenses? And so if your bank account, just as a rule of thumb, is steadily going down, you know you're not breaking even. So you know you're having more outgoings than income. So then there's different strategies you can do, like, increase your price is one thing. People have an issue with that because they feel like, oh, I can't possibly do that. But your suppliers are doing it left, right, and centre, and they have done so since last lockdown. I know one of my engineering guys, his suppliers' bills went up 20% since we had our very first lockdown. You need to pass that on. You need to think about also to that your equipment that you're using needs to be replaced. Don't be shy to charge additional for vehicle fees, if you have to travel, things like that. So a lot of that is around mindset, and it's around confidence. You offer something that somebody else doesn't know how to do, and you do it well. Charge accordingly, and make sure. But yeah, I guess the first thing is look at what your income is, what your expenses are. Can you scrap some of these? Can you buy stock on consignment? Can you cancel some orders? Can you negotiate with your suppliers? And the forecasting, you will get better and better at it, because what you can do is go, okay, actually in November, I want to earn $100,000 this month, as an example, or 50,000.
I do as well. Yeah, that'll be
good. Yeah, that would be awesome.
How do I do that?
You do that by knowing your metrics. You do that by knowing, okay, I need to sell this particular thing to so many customers in order to get to that amount. How the heck am I going to do that? And then you go, okay, do I need to up my pricing? Do I need to up my advertising? So that's where you really start targeting your campaigns in terms of advertising. Also measure your advertising. Figure out what you do does actually work.
That's awesome.
Yeah, there's a lot. Like, I could talk about that stuff all day, but
okay. Yeah, it's amazingly good advice for all businesses. So one last question: if you could give small businesses one small piece of advice right now, what would that piece of advice be?
Yeah, one thing I would say is plan. So right now, if you are sitting there going, I don't know if I should shut down my business or if I should keep going, what I would say to you, actually reflect on what you've got. Because sometimes we get into this hamster wheel and go, oh my God, what am I doing here? What am I doing here? I don't even know what I'm doing. You've got to understand your numbers. Because it's all about the cash right now for you. People are not sleeping because they're thinking about the money. How am I going to pay my rent? This is the number one priority right now, is go into these things that we just talked about. Have a look at what sort of stuff have I got that I can actually sell. Can I combine my services with somebody that is offering something similar or that complements what I do? Can we go and join forces? I guess the thing is, this is the time to come out of your comfort zone and not let COVID define your strength and the reason why you went into business initially. Take hold of all the subsidies that are available at the moment, and I know they don't even cover the surface. But negotiate with IRD. They are really good to deal with, I must say. They've been really, really good. But do not let COVID define what the future holds for you. And what I also say, and that's quite counterintuitive, but don't be afraid to fail, but fail fast and move on. If a strategy doesn't work, let it go and move on, because that's the only way forward. The only constant thing these days is change, and you've got to be adaptable. And don't be scared to reach out for help.
Awesome. What a great way to end our podcast. Miriam, thank you very, very, very much for your time. There's a lot of awesome information in there. I hope everyone out there appreciates some of that, and we'll hopefully catch up again, Miriam, and talk about some other tax sort of stuff and business-related accounting. But from us to you, thank you very much for your time, and we really do appreciate it.
Thank you so much, Craig. It was a pleasure, and anytime I'm keen to contribute.
Thank you.